Everyone, this afternoon on the marketplace, IMF Boss Kristalina Georgieva charges Ghana to reach a better deal with Eurobond holders. We'll discuss her meeting with President Akufo-Addo and hear bits of what she has been saying at an AI conference in Accra.
We can see 3, 4, 5% productivity gain if we go forward with artificial intelligence effectively. So this is my first point. We desperately need something that would inject more dynamism in the world economy.
Also coming up, businesses may now have to turn to service providers using satellite links for uninterrupted internet service after National Communications Authority announced current subsea cable challenges could last for at least 5 weeks. Also, interest rates fall for the 11th week running as demand for Treasury bills continues to surge. My name is Daryl. Kwawu. Thanks for being with us. Details coming up. All right, let's begin with the financial markets. Interest rates have fallen for the 11th week running as demand for Treasury bills continue to surge. The government recorded more than 37% oversubscription of short-term securities. Head of Trading at Republic Securities, Patrick Edemagama, joins me on Zoom with an update on what to look forward to this week and what transpired, of course, in the previous week. Thanks for joining us, Patrick. So give us some more update on how the auction fared last Friday.
0.381 billion. We noticed that 11.24 million Ghana cedis from the 182-day bids were rejected due to high yields that were being quoted by investors. Again, we've seen all the three tenors decreasing. We've seen that the 91-day cleared at 26.5, dropping by 24.73 basis points. We've also seen that the 182-day closed at 28.99, decreasing by 25 basis points, and also the 364-day dropped by 25.04 basis points to close at 29.6%.
It was a week we saw. Yet another decline, Patrick, in inflation rate for the month of February. Tell us about how that has impacted the markets, because it appears there's some confidence. I mean, interest rates falling for the 11th week running, government obviously recording an oversubscription.
Yes, what we are saying is that we were actually looking out for the inflation rate to see the direction for February, and it came out at 23.2. That's also a decrease. What it means is that the trend of the downward decrease of these bills will continue for some time. We've seen this as the 11th decrease or 11th consecutive decrease since last year. So we are expecting this to continue. It only means that the pricing guidance is working. Anything that investors bid or quote outside the pricing guidance is being rejected by the Bank of Ghana. So it's a good sign that we should expect the rates to drop further.
On the stock market, we've got our eyes on MTN Ghana. Tell us what's happening with them.
Well, for last week, we noticed that MTN dominated trading volume and trading values by 98.1% and 97.3% respectively. There has been a lot of demand for MTN, and we know why, because we are still approaching the ex-dividend date. They've declared dividend, which is yet to be approved by the shareholders during their incoming annual general meeting. But following the trend, this is higher than what we saw last year. So there's some confidence in that stock, although it also gained some pesos to declare at 1.5 Ghana cedis per share. So we still expect this to continue for the weeks until the end of March.
Interesting, because we've got Vodafone rebranding to Telecel. We've got a lot happening with internet disruptions. Do you anticipate that to have any impact on MTN?
Ideally, it should have impact, but because it is seen as something global, something happening to almost all the telcos, I think the impact will not be that much on the stock. and the price now is actually being propelled by the dividend. So after the dividend period, the ex-dividend date, then we can be able to see whether investors will start reacting now to some of these news, and also they're actually watching how this will affect revenue moving forward.
Anything else you're looking at this week from where you are?
Yes, yes. Okay, so we are expecting government to target to raise 3.3 billion in the coming money market auction. This is actually to retire short-term maturities about 3.17 billion on Friday. So we expect that, and we are actually watching how this will go through.
All right, Patrick Edem-Agama, the head of Trading Republic Securities, joining us with an update on the financial markets. Wow, so we want to take a look at the visit by the IMF boss, Kristalina Georgieva, to Ghana. She has been speaking at an AI conference in Accra today. Take a listen.
We can see 3, 4, 5% productivity gain if we go forward with artificial intelligence effectively. So this is my first point. We desperately need something that would inject more dynamism in the world economy. Second, we also need to recognize that the scale of impact of artificial intelligence is gigantic. When we looked at the labor market's impact over the next years, in advanced economies, some 6 low-income countries, 26%. So this is like a tsunami hitting. We have to think how we can make the best out of it, prevent artificial intelligence instead of source of good to turn into a source of inequality, misinformation, deep fakes, distortion in our lives. We identified 4 areas where progress has to be made, and different countries are in a different place with regard to those areas. Number 1, digital infrastructure. Without it, it is very difficult to capture the benefits of artificial intelligence. What we know is that digital infrastructure is more advanced in advanced economies. We know that in Africa, on average, access to the internet is still only 50% of the population. Some countries do better, but some countries do worse. Second area, and B, is the key for success: investment in human capital and in flexible, adaptable labor markets. When we look at countries that have strong, dynamic, agile labor markets and investment not in mechanical learning, but in learning to learn, ability to shift from one task to another, the Denmarks of this world, the Singapores of this world, they're better prepared.
All right, so the boss of the IMF speaking at an AI conference in Accra today. Earlier, she met with President Akufo-Addo. In that meeting, she charged Ghana to reach a better deal with Eurobond holders. She pointed out that Ghana must make sure it is not shortchanged in all its negotiations with the Eurobond holders. Joining me on Zoom to discuss this is Professor William Sipra, who is an associate professor of finance at the Andrews University. Grateful you could join us to discuss this. And so, I mean, I find it interesting that she's charging the government to ensure that we are not shortchanged by Eurobond holders. How significant is this warning coming from her? What is the probability that we may be shortchanged?
Daryl, and good afternoon to your viewers. For this to come from the IMF director, it may mean that probably some things are not going on very well. That is why she's giving this warning. If you ask from my perspective, probably some comments that we have made in Ghana may have instigated the issue of what she is terming as short change. when you go to this kind of negotiation, Ghana as a country must present the case as they are to them. And these Eurobond holders will also compare the case we are making to what we are saying outside. So I give you some examples. When we mention to the world at Parliament that we are turning the corner, when we mention to the Ghanaians that economic indicators are pointing to the right directions, definitely such statements may let the Eurobond holders know that why should we accept a haircut of 30 to 20% on our principal, a 5% reduction on our coupon payment, and then less than 20% in terms of less than 20 years in terms of maturity, when you are telling your members of parliament and your country members that you have turned the corner and economic indicators are pointing to the right direction, then there is no need for us to agree to a massive or huge reduction or haircut. So some things like these comments are probably will be what is causing this kind of lower negotiation or short change negotiation. So going to such negotiations, we tell the truth. We tell them the financial difficulties the country is facing, especially the financial distress where we find ourselves. Our debt to GDP is not at the right position. The sovereign debt crisis that the country, Ghana, is facing, the foreign exchange rate or currency risks that we have, and then also the high inflation situation. In such cases, these bondholders or Eurobond holders will agree once they know that in the contract they sign in purchasing the bonds, government may have this the sovereign rights or sovereign risks, and when these conditions persist, they may come in to ask for a haircut.
Yeah, and also this statement coming at a time that we are told, reported last week that the government could potentially reach a deal with Eurobond holders by the end of this month. And so I want to know right now, from now to the end of the month, when we expect a deal to be reached, how do we ensure that we are getting a fair deal?
Well, as I've mentioned, the fair deal is that in the first place, the committee meeting or having this discussion must be able to stand their ground and mention to the Eurobond holders that the reason why they get a higher coupon payment is because of these risks, and these risks have crystallized. So then the government may have to come in with such kind of argument that they have to accept the haircut of the 30 to 40% and then 5% on coupon. Also on fair deal, a collective agreement sometimes becomes very difficult because these bondholders are made up of different entities with different perspective or reasons for purchasing Ghana's Eurobond. The way that our technical team will have to address the issue is how do we come to a collective agreement? And then also the third one is that treating all the Eurobond holders with some form of equity. The debt, the haircut that must be given to these Eurobond holders must be fair. In such cases, the member or the bondholders will now notice that, there's that kind of fairness in the haircut or the discussions. If they've seen that some Eurobond holders are getting some preferential treatment in terms of their bonds they are holding, it becomes a challenge.
Well, she alluded to the situation in Zambia. I want to read bits of what she says. Says, the deal with the Eurobond has to be a fair deal, otherwise we risk seeing what happened in Zambia. In October 2023, I thought the deal was done. Then the private sector twisted Zambia's arm and then tried to give them a better deal than the official creditors. Tell us a bit more about the situation she's making reference to.
So in the Zambian situation, when they all thought that it was done, there were some major, let me put it, three main elements that were not, did not go very well. The first one is that there were so many creditors, and so Zambia struggled in coordinating that kind of activity very well with their creditors. As I've mentioned, they didn't see the issue of equal treatment for all the Eurobond holders. Also, the technical and legal team saw some form of challenges in putting these contracts together. They call it the collective action clauses. That's a major challenge which caused a delay. Then the last part is we know the COVID-19 pandemic issues. Getting to the later part, Zambian economic situation got worse, and also the players or the parties, let me put it, those who went for the negotiations lacked some form of transparency. And this was what really, these were the major factors. So as I've mentioned, our technical team leading the negotiation, we should see some form of transparency and disclosures, so that it's not going to cause, as mentioned, the Zambian situation.
All right. So she also talked about, keeping within budget during this election year. The president's response was, sure, we're going to do that. We're going to try very hard to stay within budget ahead of the elections. He also had his take on, I think it's the first time I've heard him talk about Ken Ofori-Attah's exit, saying it was time for him to wind down. Your thoughts briefly on the president's submissions?
Probably, according to the president, Ken needed to wind down, which means that the president needed a new person to do the negotiation. But we all know the heat that was coming from both within the party and also from outside the party, which in such cases would affect the mentality of the finance minister in leading some of the negotiations. And then we got to a time, I should say, people were fed up with some of the comments of the finance minister. And in such situation, you need to bring in a new person to ensure trust. So if you ask me, it was time, but the indicators were very there, were all there, that people were not, in tune with what the finance minister was saying. So Ken needed to step aside.
All right. Professor Williams-Pippa, grateful you could speak with us. Finance professor at Andrews University. I appreciate all the way from the US. We thank you so much for joining us on the marketplace. Now, businesses may have to turn to the internet service providers that use satellite so they can be assured of uninterrupted services. This follows an announcement by the National Communications Authority that it could take at least 5 weeks for the subsea cable challenge to be addressed. Here's more in the following report.
However, this may come at additional cost to businesses that go this way in ensuring that their daily dealings are not disrupted. This is because it has been argued by some industry players that relying on those subsea cable supply for internet services is seen as more cheaper compared to satellite links. But looking at those missing out on these big contracts and deals, this is something that some businesses may have to sacrifice and have to cough up some funds to deal with the situation. We are also learning that there are some firms out there that are offering business offices that are fully connected to uninterrupted internet services. For those that are working from home for international firms, this may be good to them. Again, for some of those startups and entrepreneurs, that might be the way to go. We also understand there is also one mobile network that was not hit by this subsea cable disruptions. So for some startups, maybe switching providers could be the way to go. But looking at the time that this challenge will be resolved, it will definitely come at huge cost to a lot of businesses.
Well, lead for Eyes of Africa, Henry Kobler, joins me on Zoom. He's a tech pundit. And so, Henry, good afternoon to you. 5 weeks to fix, according to the NCA. That's very long. What's your understanding of the damage subsea?
Thank you very much, Daryl. So, I mean, there's been extensive press releases from FCA that has clearly, demonstrated what exactly is sort of happening to these cables that are in the sea and how the impact of it is going to affect businesses, economic structure, social, and even academics. Generally, I'm even looking at it in the point where it could even be a national security issue because there are quite a number of security threats and things that could be happening at the time where most systems are down and a lot of monitoring is not on most systems. I mean, there are quite a number of financial institutions that have issued press releases as to the connections being down. So in that regard, you wouldn't even have the monitoring posts to be looking at most of these transactions that are taking place on internet services that are provided by financial institutions that are in just one sector out of several sectors. And so, we're looking at these thick cables coming down. There's still preliminary investigations that are looking at ship anchors sort of hitting these sea cables. But I think that, basic of it is that we're down with the internet, and that is a very primary concern, which we sort of have to start having consideration in terms of the collaborations and conversations that we need to have as an industry to look at what is only be our source of alternative at almost a time where we need internet and we're sort of building all infrastructure on the internet. I think that it gives prudence to the point where we can start looking at alternatives such as satellite internet. It doesn't really matter the cost of us, it's sort of bringing value. I think that most players in the industry are sort of willing to jump on alternative cost or sort of have it on the switch side.
Well, so now the options for businesses could be using the satellite links or investing in them as a backup. The indication we get is that most businesses find that expensive, right?
Very. I mean, if you're looking at one of the creeping internet services that's sort of coming in as Starlink, you can sort of understand that you'll be paying almost about $250 every month to sort of have that service available, coupled with all its issues it can have sort of. But again, like I always mentioned, you would always have regulations always lagging behind implementations of some of these technologies. And so I've seen quite a number of people already jumping onto these services without regulation keeping up an eye on them. But generally, if there's a way to go, I think that there should be that opening. Cost with regards to the losses that you have is always a point where businesses will always look at what's the cost in really not having internet as to the cost of actually having an alternative that would cost me but would still get me some level of value. And so the cost, yes, it comes in terms of the arguments that we're going to have on the tech space. But trust me, personally, I've had to lose a lot of businesses in terms of being able to connect faster with them and all of that. And I would rather jump on any service provider to sort of give me. I mean, I've even seen the economic impact is actually having where one network is sort of still having some level of internet, even though it might not even be up on 4G and all, but you can still feel that a lot of people are still choosing that alternative. And so that means that alternative solutions in terms of internet provision is very important, regardless of the point of cost. People will still jump onto it.
Well, talk to us about the impact of these disruptions on tech-based businesses. I mean, you're talking about the impact it has had on you. For instance, I mean, ride-hailing businesses, delivery businesses. I mean, people are having to grapple with this disruption. What sort of alternative arrangements are they making also?
Yes, I mean, it's funny how we've sort of had to look at the argument of saying, let's build tech and digitalization infrastructures and move. And we've really not had this at the back of our minds that we could really go down and it could take probably 5 weeks or even better off to sort of fix. Again, like I'm saying, the different sectors and how it's actually getting to affect each sector. I mean, the tech industry, the startup industry, the fintech industry. I mean, it's crazy when you have to look at the losses. I've had to have my workers just being idle in the office because they can't sort of be on that. And again, it actually also poses a lot of risk because now I've seen a lot of suggestions in terms of people trying to use VPNs to redirect internet services to be able to jump onto websites which are relevant to them and to be able to work. And that can even be much of a security concern because a lot of people are now starting to explore really a lot of options which they're going to really use for work. In the tech sector, I mean, it's massive. For me, I've really been affected much. I can understand that from the fintech industry as well, because it's also a sector that I sort of deal with. And I'm sure that within the week or two, there are going to be huge transaction losses that are going to hit most of these financial institutions and fintech institutions as well. Most startups are really going to have like a downtime in terms of the number of users that are going to be on. I can understand that's why you have providers like Google and the Meta always on trying to provide their own fiber to be able to stay afloat whenever some of these options go down.
Right, 5 weeks, that's a long wait, Henry. Well, thank you so much for joining us, Henry Cobbler, lead for Eyes of Africa. I appreciate your time. And that's the marketplace, everyone. More news on our website, myjoyonline.com/business. I want to give you an idea. The story is trending over there. CD depreciates 8.63% to dollar since January 1, 2024. $1 going for 13 cedis, 60 pesos. Also, learn from past experiences, exhibit fiscal prudence, election year, IMF MD tells the government. And so those are the stories trending on our website, myjoyonline.com/business. My name is Daryl. Thanks for watching. We will be back same time tomorrow.